the 5,000 or so people that come together, we're sort of, for lack of a better phrase, the converted. And I think it's always helpful to talk amongst ourselves, if you will, because we are in agreement. But one of the things that I really wanted to focus on today is some of the places where there's a little bit of disagreement and where we might actually be on the same page in terms of solutions. Sometimes it's a little bit about the semantics and kind of the approach. My own background, just so you can sort of understand where I'm coming from in terms of the semantics, is I did environmental policy in the Pentagon. Some of you all see them, know the military to be some of the most progressive people in clean energy, but if you don't know that, then you find it a little confusing. And recently, Secretary Mavis went to the Hill, and part of his talk was to actually he went up there for his budget hearing, and so part of his goals as the Secretary of the Navy was to put energy efficiency and biofuels into his budget. And the congressman said to him on the House Armed Services Committee, you're not the Secretary of the Environment, you're the Secretary of the Navy. So we are in a situation right now where maybe some of our electeds don't fully understand the opportunity. I also worked in environmental insurance, and I think one of the pleasures I've had in working with Jigar is I think he also takes a very interesting and unique approach to looking at these issues. He is fully a businessman, and his approach when he became, when I started with him at the Carbon War Room in the beginning, was to push us through on the business solutions. And I think that's a theme that's passed through. So with that, I'll jump in. I'm going to say just a few more words. Jigar will say a few words, and then we're really, both of us are excited to hear your questions. So how many of you all attended the Climate March? Yeah, we actually ended up running into each other. And how many of you have done something since the Climate March to move that agenda forward? Well, that's pretty good, about half. What I'm actually hoping to do today is talk about what the other half can do, and then the rest of us who weren't in the room. Because I do believe, and I'm sure that y'all do too, I mean, there's been some momentum, there's been some conversation. And so what I really want to focus on today, even though I work for, with an NGO, is what are the private sector opportunities? We're talking about creating climate wealth. It's not only the title of Jigar's book, and he's actually signing copies. He doesn't know I'm saying this. Signing copies after this, so 11:30 somewhere. Find it on your schedule. Or as Richard Branson says, creating climate wealth is not only the greatest wealth-creating opportunity of this generation, but it's one of the most important mechanisms to address global warming. And so I think that statement makes such perfect sense, I'm sure, to all y'all in the room. It makes perfect sense to me. My challenge is when we talk to people sort of outside our bubble, why don't they get it? It's so clear. It's an opportunity. You're creating jobs, you're creating cash flows, and you're also having an affirmative effect on the environment. And so how can we actually, something just doesn't feel right to people. And I don't think it's just about environment. I mean, you have this situation where the economy's strong, but I don't have a sense that people feel empowered. We have proof that climate change is confronting us every day, but we don't really seem to be responding as a culture. I think the folks here, we have our pieces of it, and we know there are solutions. I mean, I think they can be overwhelming. Jigar often talks about the $2 trillion that we need to deploy by 2020 and how we can do it. And, it's the notion of bringing everyone in. I recently was at a breakfast with a former Goldman Sachs trader and a guy from Barclays who was a derivatives trader, and they both were talking about the fact that the CEO of a particular NGO that they're both involved in could just as easily been the CEO of Goldman Sachs. That they have that same drive, that same ambition, but they're not motivated so much by money, but by other factors. But it's the same idea, it's the same piece. It's the same thing when you talk about social entrepreneurship. This whole notion of we have to teach social entrepreneurs how to read a balance sheet, have to actually think about scaling it up. We can't be afraid to talk about the financial opportunities that can scale, that can create other opportunities. And so, some of you might be working for companies that understand these solutions. Some of you may be working for NGOs. The solutions are there, and a lot of how we visit on them, I think, are really going to help us. If we can message it in such a way, we can actually move things forward. I'm going to quickly give 2 examples of that, and then I'm really interested to hear what Jigar has to say. Our notion is, or my notion in all this is, we've had success over the years, and I'll drill down it a little bit. I mean, the Carter administration actually had quite a bit of success in this sector. Power purchase agreements, Jigar and Sun-Edison, and the industry that spurred, that is a standardized, industry right now that has a secondary market, and all those pieces are really moving forward. RPS, we're having those at the state level. They could be stronger, but they are in play. Tesla on so many levels, right? Even the batteries, the storage, the opportunities. Sun-Edison, Solar City, Nest. All of these pieces are coming together. And again, you have someone like Tony Fadell, which I've had the privilege of sitting down with a couple times. And he talks about his kids, but he talked about his kids after our 3rd meeting. The first 3 meetings were about how can we actually deploy his product. But his product can have a huge impact on saving money in your home, saving energy, and also just a sense of security that you could be here in Austin and wondering how your apartment's doing in New York. So all of these pieces are coming together, is my sense, and I feel like now we're at a point where we can make that move forward, and I think that's part of what I'm hoping came out of the climate march. And so I think one of my favorite examples is Jimmy Carter, because you don't sort of think of him as being such an advocate for climate, or he was the panels on the White House, but you didn't sort of see him as a primary mover. Well, we have proof of both job creation in his time and clean energy implementation. During our first major conflict with Iran, and in the name of getting the U.S. off of foreign dependency on fossil fuels, sounds like a familiar story, Carter won bipartisan support in the House and the Senate and with the private sector leaders to work together to enact a series of laws that created higher efficiency standards in housing construction, refrigeration stoves, and energy efficiency. And the laws are so embedded now that with all of the opportunities now that you're seeing Congress trying to reverse laws, they're so embedded that they can't do it right now. But the upside is, when President Carter was talking about these issues, and if you look at some of the old tapes, he talked about energy independence. Global warming never came into the conversation. It was, how can we get energy independence from the Middle East? And also, a piece that people don't always remember is he created he created 2 million jobs, which, by the way, no one else has done since World War II, and all during an era, remember, of very high inflation and high interest rates. So it can be done. I mean, the messages are there. When we see other countries in embracing renewables, Canada's got 64% of their energy coming from renewables, mostly hydro. North Korea, of all places, 62% of their energy comes from renewables. China, 18% on the rise. Great Britain and France, 16, 17%, and then in the U.S., 10%. Well, it's a great opportunity for us. It's not enough, but it's certainly an opportunity to grow. And what can we do? So my favorite quote within all of this is Buckminster Fuller, who says, "You never change something by fighting the existing reality. To change something, build a new model." And I argue that's a lot of what we did in the Carbon War Room. We developed third-party financing products in shipping and energy efficiency, and most recently in trucking that we just announced during Climate Week. Third-party financing, and going to mainstream. Part of my job was to go out to the private equity firms and find firms that would be interested in financing these products. And when I was out there, I didn't talk about, that shipping is the 6th worst emitter of carbon between Japan and Germany. What I talked about is basic retrofits can save, basic retrofits can cost $1 million to $2 million, and the paybacks come in 18 to 24 months in savings. And this is what we think the size of the industry is, but you do your own research and maybe you'll see it's bigger or smaller. it wasn't a conversation about we really want to help the environment. We do. Big secret. Like, I think we have to address climate change, and I think this is the way to do it. And so the firm that we finally locked in with, Maroon Capital, was so enthralled, they've actually created a shipping finance unit. They're raising a separate fund. They've looked at two, we look at one, in the Carbon Forum, we've looked at one class of shipping. There's another class of shipping. I mean, they've grown this whole opportunity. Again, having a huge positive impact on the environment, but also having a great impact on the bottom line. And so, so that's like one example. The other example I'll give is of course PAYS. I think Joshua Kagan from Carbon Forum is here. There he is. Joshua Kagan, who runs our energy efficiency program. So anything I say, he can correct me before, during, or after. And he's also speaking tomorrow, so I hope you all have a chance to go to his panel. But PACE is a great example of this. One way to talk about it is that the residential PACE market is taking off. It's $100 million securitization of PACE projects commercially. There's $30 million being financed just in Connecticut alone through Jessica Bailey at the Green Bank. $75 million commercial PACE deals flowing. There's $250 million pipeline. In coming year, massive growth opportunities in places like Texas and Illinois. The other way to talk about it is one of our partners, Y-Green. They've financing projects in Miami-Dade. It's one of the most significant job creators in the county. It also offers skilled and unskilled labor, and by the opportunities, and by the and by the way, 40% of carbon emissions come from cities. So the notion of job creation as well as addressing carbon carbon issues. The last sort of piece about that, my joke is you can't outsource retrofitting a window. So you are also creating jobs and keeping them at home. I can't speak for Y-Green, but I believe when they pitched the economics to Macquarie Bank, which is one of their partners, they talked about the financial benefits, and then they talked about the benefits of to the climate. I could talk more about green bonds. We had a great discussion about them at breakfast, but I'm particularly interested to hear what Jigar has to say myself. What I really just want to end with is, from my experience, the capital is there. I've spent so much of my time just meeting with some of the private equity firms and some of these investment banks, and probably some of the folks in the room, and certainly a bunch of people, many of the folks who are here today. Here for the conference. And the capital is there, and I think it is ready to get deployed, and I think the examples are there. I think a lot of it is how we go in and approach it. And so, my sense is, we're the soldiers who can go out and do that. So, so thank you. It's great to be here. Thank you.
Thanks, Anne. Anne's one of those folks whose modesty, I think, comes through even when she's on stage being featured. She basically was Al Gore's right-hand person on environmental issues for a number of years, and then moved into the Department of Defense and other places, and pioneered some of the environmental finance work at AIG and some of the other insurance companies. And so it's always a pleasure to figure out what Anne's thinking. I think I wanted to change directions just a little bit. I think that there is this weird fascination even today about technology, right? This is South by Southwest, right? So people are supposed to launch stuff here. Isn't that how this goes, right? You have an app, you come here, you spend your last $5,000 you have on your credit card, and you hope and pray that like TechCrunch or somebody else actually covers you, and you get 1 million downloads, right? So I think that there's this fascination. I think when you hear what Anne's talking about, new technology is not fascinating in our sector, right? It's just not. At the time at which you own a house, and at the time at which your air conditioner goes out, how many of you want to get the unit that just won the MIT Energy Prize to replace your old air conditioner, right? Nobody, right? You want whatever Carrier is making, the Weathermaker 3000 or whatever it is, right? Or LG or Samsung. You want to know that this is a big purchase for you, right? It's $3,000, $4,000, $5,000. You want to make sure it works for the next 20 years, and you don't want to be the guy or the woman who, at the time in which you sell your house, has to explain to the new buyer that here's the manual that was cobbled together by some MIT students that you can use to run your air conditioner, right? So that's where we are. But the thing is that we all want to believe this narrative, which is sort of purported by folks who I think are actually anti our movement, that technology can save the world. Technology doesn't save the world, not in what we're doing. I mean, we call it clean tech because we just want to feel like we're just a little bit cooler than the rest of the folks out there. But what we really do is infrastructure, right? I get that that's boring, right? Nobody wants to say, yeah, Mom, I work in infrastructure. But I do. I work in infrastructure. I happen to have had my success in electricity infrastructure. The Carbon War Room has broadened that to all sorts of carbons. That includes deforestation. It includes building materials. It includes transportation, water, industrial emissions, et cetera. And so all of those people are working in infrastructure. And I'm proud to work in infrastructure. I don't care what you guys think. So now the question becomes, if what we're working on is infrastructure, right? You've got the moral outrage piece, which we all showed at the climate march. You got a lot of folks trying to divest and invest and all sorts of other interesting stuff on this side. And then you've got the business opportunities that Anne's talking about on this other side, right? And I think for those of you who heard me talk 2 years ago, I think solar energy was already really, really strong 2 years ago. But today, I think, correct me if I'm wrong, I think it's widely understood that it's actually doing really well now. I'm not sure it was widely understood 2 years ago, but now you've got 11 yield cos, which are publicly traded asset-based companies that you could actually invest in through your 401k or through your broker that pays you between 3 and 6% dividend yields. Plus, many of the stock analysts believe that those stock prices are going to go up by 5 or 6% a year. So not only do you get a 3 to 6% dividend yield, you also get the growth in the stock price, which is pretty damn good these days. I mean, if I could figure out how to get 8 or 9 or 10% total overall returns on a regular basis, investing in hard assets with long-term contracts with good counterparties with the utilities on the other side of it, I think that's a good deal. That wasn't true 2 years ago, right? 2 years ago, President Obama didn't say in his State of the Union address that we were putting solar on a roof every 4 minutes, which is now more like every 2.5 minutes, but who's counting? So we're doing well. So the solar industry is doing really, really well. But how many of you guys believe that we're achieving the same level of success in electric vehicles? Right? Nobody. And it's interesting because as much as we talk about Elon Musk, he's selling 20,000 cars a year, right? We buy 10 million cars a year. So we got a lot of work to do, right? Same thing's true with air conditioners. For those of you who have an air conditioner that craps out, that air conditioner is $3,000, $4,000. But the cost of running that air conditioner for the next 20 years at your house is $20,000, right? And so what stops you from spending an extra $1,000 for the highest efficiency air conditioner you can get so you could save $4,000 in energy bills over the next 20 years, right? That's the psychological issue that we're all trying to figure out. And that's why we created a no money down financing mechanism in solar. We're trying to move that to shipping or energy efficiency for trucks or air conditioners or lots of other things, right? But I think that this notion of doing that requires me, in particular, to be boring, right? Think about who I pitch to, right? I'm going to the Texas Teachers Pension Fund, and I'm going to them saying, I think there's a crap load of people out there who will finance their air conditioner and get the highest efficiency model that Carrier or LG or Samsung or whoever else makes because I think that they actually do care about their energy costs. Why do I think that? Because the last year that most people that are my age believe was a rich year for the US was 1999, right? That's probably the last year that most people think we had a great economy, right? And so compared to that year, we were paying $1.15 a gallon for gasoline then. We're paying $4 now. We were paying 8 cents a kilowatt hour for power back then. We're paying 12.5 cents per kilowatt hour now. We were paying $2.50 a million BTU for natural gas, and we're paying $4.40 now, right? So for all of the BS and all of the energy boom and all the other stuff, the average American family today is paying an extra $4,000 per family per year for energy. Now who feels poor? Right? That's why people feel poor, because they haven't seen a pay increase since 1999, right? But they're paying $4,000 more for energy, and that comes from where? Another part of their budget. The same thing's true with the city, right? If you're the city of Austin, the amount of money that you spend on gasoline and diesel for your fleet vehicles is coming out of some other part of your budget. It's not like property taxes have increased so much since 1999 that it actually can more than compensate for that extra budget. Something else got cut from the budget so that you could make room for something that no one on the city council wanted to pay for, right? The stupid thing about this is that Jimmy Carter has worked his butt off to make sure that we all have 1,000 different technologies that were invented in the 1970s that are actually ready to go to scale now. All the technologies I'm talking about have been deployed in the field for 20 years, but we still haven't done it. I mean, how many people heard about the Pickens plant? Right? Where the hell is the Pickens plant? Right? I mean, how many heavy trucks have switched to natural gas? Very few. Right? That requires work, and it's boring work. It's not glamorous work. It's not an app, although it can be supported by apps. It's not like, you know, one of those things where I put money into, like Thrive Capital did an Instagram, and suddenly like Facebook buys it 1 week later and I make $1 billion. That's not how this works, right? This is 10 years of solid effort every day going in and helping. I mean, how many people here are from Austin? Do you know what's going on in your city council right now with Austin Energy and the 600 megawatts of solar they're trying to build here? That's 10 years of work. I know Michael Kuhn. Michael Kuhn's been working for 10 years in this city to figure that out, and Carl Rubago and others. That manifested itself in a very testy meeting that I saw on the web a couple of weeks ago between Austin Energy, the city council, and local folks in the community who want to see a natural gas plant that's old and costly converted to solar. But that's what it takes. That's why I'm successful, is because there are thousands of people around the country that are willing to go to bat in their community on something that they believe is boring, right? And so I think it's important for all of us in the room to note where we're headed and how we've gotten there so far, because it is so cool to talk about, you know, smiley faces and frowny faces on bills. It's so amazing to talk about an app that allows me to like catch an Uber whenever I want to, but is it actually systematically reducing emissions in the transportation sector? Hell no, right? They're just worth $16 billion, which is great, right? And the same thing with Airbnb. I love the sharing economy. I love it. But are we actually systematically reducing emissions in the building sector in this country because of Airbnb? No, right? We're not. And so I think it's important for all of us to get a grip on what it is that we need to do to actually figure out how to hit real milestones. Because right now, we're just having fun cheering from the nosebleed section, right? And it's time for us to get into the box seats and actually start, like, you know, really making a difference as to how the team is selected, who coaches the team, who's the special manager, what's their draft strategy, and making sure that we're actually the ones in control. Thanks.
Are there questions?
Yes. Now looking with the 2020 goals that the city of Austin we're all aiming for, how do you all propose that we get that done?
How do we propose that we actually accomplish those goals?
Yeah. With the current status quo that we're in.
Well, I think I'll answer it from the money side, and I think Ann's got the political and the NGO and the intersection of social side. I think that when it comes to money, I think CPS in San Antonio has proven that money is not the issue, right? Raising money, getting folks to build a manufacturing facility for solar in San Antonio hasn't been a problem. So I don't think it's a money issue, right? It's an organization of the marketplace issue, right? So today, we were talking to folks, and Austin Energy basically has this 1,200 megawatt goal to save another 1,200 megawatts of electricity in Austin, when they've already saved about 1,000 megawatts of energy efficiency, right? So from their perspective, the low-hanging fruit's gone. From my perspective, they're not thinking hard enough, right? I mean, you've got air conditioning systems that are way more energy efficient today than they were before. Austin's experiencing hotter summers than they've experienced in 25 years. My sense is figuring out how to get commercial buildings like this to move to chilled water systems and ice storage systems, most of which have been around since the 60s, right, through companies like CalMac and others, is a big deal. Same thing's true with transportation, right? Austin is the place where Car2Go was basically piloted, right? But I don't know that it's possible in Austin yet to have a fully integrated transportation system such that somebody who's 24 years old today knows that they actually are so well supported on the mobility side that they never have to own a car, right? I don't think we've hit that point yet. There are a lot of 24-year-olds who don't own a car today, but when they get married, they decide to have children, et cetera, they're like, oh, we got to have a car. We're at a point now where the technology exists such that we don't actually have to allow them to, I mean, not that we're going to force them not to, but we should make them comfortable enough that they don't actually want to own a car at that point because it's expensive. It's like $900 a month to own a car. And so there's a lot of those things, but Austin itself has had this long history of piloting and not rolling out. And so it'd be nice to see Austin actually roll stuff out, you know? I mean, whether it be natural gas vehicles where they've piloted but not rolled out, or, you know, like some of these smart meters where they've sort of piloted but not fully rolled out, or some of these on-demand water heating systems where they piloted but didn't fully roll out, or Pecan Street, which is an extraordinary pilot but they haven't fully rolled out. So, I mean, I do think that, you know, Austin's in a place where they've got some of the smartest people in the country from a municipal utility point of view, city council, the folks who live here, but, you know, it's not the money issue that's in the way. The issue is that we actually need probably, you know, something on the order of 1,000 entrepreneurs in Austin who actually are willing to knock on doors and get the deal flow. You got to get people to sign contracts, and then those contracts can get financed.
I guess the only piece that I would add on the government side is I think it's actually explaining to the constituents. I think this all sounds very sort of ethereal, and I think, you know, having a program that actually gets to the, first of all, that the council members understand it, that they can go and turn around and take ownership. You know, this is what I'm doing for you in my day job, I think is significant. And I don't know a lot of communities that are so good at that right now. You know, we're Roy Christensen, I'm sorry, from EDF, and I are on a, actually, and Jigar's, I believe, going to be a judge of a microgrid prize, and part of it is actually just a road show where we're going to go around the state and explain to people about microgrids. And, you know, the pushback we've had actually is from the municipal governments. You know, we're representing the mayor's office in NYSERDA, the governor's office, in NYSERDA, but here we are, like the communities don't understand. So our first part is actually explaining to the local leadership and actually giving them ownership so they can turn around and tell the stories. Let's go over there.
Hi, my name is Deep Patel, and I'm with a solar company out of Los Angeles. I have a question for Jigar about the value of solar tariff, and what you think about that, if that would actually stop solar from growing residential. I'd like to get your thoughts on that.
Well, without getting too esoteric, I think the question was really around value of solar and whether there's this big pitched battle in the solar industry between folks who want to keep the status quo with net metering and folks who want to move it to a value of solar tariff where we're getting paid for what the utilities and others, you know, work out the real cost savings are to the ratepayers. I'm one of the big proponents of value of solar. Value of solar was actually created first in Austin through a contract with Clean Power Research with Tom Hoff, and I think has been accelerated greatly by the work being done in Minnesota and California today. Look, I think the solar industry is getting big, you know. I mean, it was fun when, you know, I mean, Joe Hudgens is in the audience here, and Joe and I worked closely together at BP Solar, and And we were the largest solar manufacturer in the world, I think, at the time. And I think we had like 40 megawatts of capacity, manufacturing capacity, or a little more. Exactly. And, I think today the solar industry will be about $80 billion this year globally. And, we just passed 200,000 megawatts of cumulative deployment globally. We're getting pretty big, right? So we need to start taking responsibility for not only disrupting the grid, but actually creating the utility 2.0, the future that we want to see. I think the value of solar tariff is one step in that direction. And I get the fact that it's going to hurt some large companies, and it's going to help a lot of smaller companies, but that's what happens, right? I mean, we've been at the center of creative destruction, and I think the solar industry needs to drink its own Kool-Aid sometimes when we're disrupting ourselves really to get to the next level of growth.
I'm Jim Motivali. I'm going to be leading an urban mobility panel yesterday. You mentioned that Tesla put out 20,000 cars a year. The total EV production in 2013 was 100,000 cars. The auto industry is actually 16 million a year in the U.S.
Oh, wow.
What are some climate wealth strategies that would actually increase alternatives to the car and also getting people into electric cars where they do need to drive? Tomorrow on a panel, we're going to be talking about car sharing and other options like that. But
Yeah.
starting to take off. But the government has a $7,500 federal incentive for electric cars, but not many people take advantage of it. Are there other things that state and local governments should be doing or the federal government should be doing?
Well, so, I mean, let me preface my answer by saying that, when I'm a hammer, right, so everything looks like a nail. So let's sort of talk about, the PPA here. I think, look, when you think about car ownership, AAA says the average car costs roughly $900 a month to own. And some other folks are saying it's $1,000 a month to own in the U.S., right? This was AAA data from 3 or 4 months ago. So clearly, $900 is not just the car payment, right? Because a car payment's usually like $300-400, sometimes $500. And so there's gasoline, there's insurance, there's all those damn parking tickets that I seem to get. There's I don't get them anymore. I got rid of my car 4 years ago. But I think that so the total cost of ownership of cars is pretty high. But the way in which car ownership is manifested is people come to you, you have to buy a car, you have to go to the dealership, goes to cars.com, whatever it is you do, and you get a car, and then you have to, sign the contract, right? So you either pay, 4.9% interest, or you pay 9.9% interest, depending on your credit, and then you buy the gasoline as you need it, et cetera. What the electric vehicle allows you to do is because the maintenance costs are so much more controllable with electric vehicles, it's not going to be zero, but you actually sort of know what parts are going to go wrong, what aren't going to go wrong. There's going to be a lot less of the sort of lemon syndrome, I think, there, that you can actually move to a cost per mile basis, right? So I could just go to people and say, I will give you a car for $100 down. I'll just give it to you. And I'm going to put one of those progressive insurance things in the USB stick, and I'm just going to bill you at the end of the month for how far you've traveled. And if I see that you're consistently speeding, then I'm going to charge you a little bit more because, it costs me more for insurance. And if I see that you're consistently doing stuff that's stupid, I'll charge you even more. But if you're a good driver, et cetera, I'll actually just start to do that. And you just pay cost per mile. And I think for most Americans, it'll actually be a far more civilized way to own a car. Because, today, when you look at the average sort of college age person, one, they're not buying a car. But two, they don't care. When they do buy a car, they don't care what car they buy. There's no Ford versus Chevy. When I was growing up, I remember my scoutmaster would have shot me dead if I talked about buying a Ford because he was a big Chevy guy, right? Today, that's not the way it is. I mean, if you buy a Kia, whatever's cost effective. And so I think that part of this is moving transportation away from this capital intensive model, which is huge, right? I mean, if we sold 16 million cars a year at an average of what, something on the order of $30,000, $20,000, dollars a year, you're talking about hundreds of billions of dollars that we're spending every year for an asset that we drive 3% of the hours of the year. right? Less than 200 hours a year is when you're driving. The rest of the times it's parked, et cetera. And so I do think that there will be entrepreneurs that come at this from a cost per mile basis. And you're going to start with people who are salespeople, home health care folks, et cetera, who actually get reimbursed on a cost per mile basis because they will see the link right away. And then over time, you get more and more people transitioning there. Once you transition there, then the question becomes for the cities and the towns, what do they do with all their wasted space? You know, we have like 500 million parking spots in this country, right? Those parking spots don't actually make a lot of property tax revenue for the city. And that's all wasted space. If they really want to make more money, they could actually have a lot less parking spots. I think Elon Musk is coming out with a self-driving car in the next few years on a commercial basis. Nevada's already passed a law that allows for self-driving cars. The Insurance Institute loves it because we like to do everything but drive our cars. We like to eat. We like to be on the cell phone. We like to change our music. We like to, whatever it is that we want to do, there's lots of things more important to us than driving. And so the insurance industry actually wants us to go to self-driving cars. And so I do think that this is going to happen fast. I think by 2020, you will see this not be theoretical, but real in certain places around the country. And I think that, to Ann's point, a lot of the municipalities and the city council members, et cetera, actually can't even fathom, what the challenges are going to be from their constituents and how they're going to view this, and can my kids play in the street, and all those issues are not something that we've even discussed. But I think it's coming really fast.
I'm a former city council member. I was on the council when we did the first wind contract in Texas back in the 90s. And I'm about to be a Travis County commissioner, so I'm really interested in what top one or two things you think local government officials can be doing that would really make a difference. And then my other question is about the insurance industry. I was hoping 20 years ago that the insurance industry was really going to start to change, rebuilding in coastal areas, building in floodplain areas. I thought the insurance industry was really going to be a leader on the infrastructure impacts related to climate, and I'm not seeing it. So it's a two-part question. I'd like to hear answers to both.
I'll do insurance. You can do the other side.
You got the other one, too.
So the insurance industry answer is a bit of a complicated one. You have Munich Re coming around actually in the 90s, identifying the issues that you're talking about, the effects of climate, whether it's the degradation of waterways, also sort of transportation, cars that are, or trucks really more, that are inefficient. And the industry identified the opportunities in terms of climate. And they did offer, for a time, all of the industries, Zurich, AIG, Excel, all the companies did actually offer an incentive. I myself was in environmental insurance, and we did have it could have been a premium discount, it could have been a longer period of time, and the industry, the consumers lost interest. And so you had a situation where they were willing to pay a higher premium because they didn't fully understand the, insurance policy is usually a year or 2 years, and they actually just assumed that they wanted to, take a chance. And so you actually had an industry, but the insurance industry wasn't going to be undercut. So you also had a situation where the insurance industry either stopped doing certain coverages. If people were in a flood area, their house was destroyed, and then they wanted to build it again. Dolphin Island is always my favorite example of this. How many times has Dolphin Island been wiped out and rebuilt? I can't even count. And so you had a situation where insurance either just started getting more expensive in the space, or you had a situation where federal or state agencies were coming in and actually making up the shortfall. And you're seeing less of that happening now as budgets get smaller. The insurance industry has the data. And there's a woman named Lindeen Patton who actually is going around sort of beating the drum of what needs to happen. But again, it actually goes back to what I was saying about municipalities are sort of, if you're an elected official or an appointed official, you have a responsibility to the people around you. But the first thing you have to do is to understand what the opportunity is and what's the way forward. And so I think if there was enough of a concerted effort to actually bring bring the consumers up to speed, then I think, and give them a better understanding of the actual finances, I think you'd have a better opportunity. I also think the last thing I'll say about that is I also think that the insurance industry should start sharing it a lot more. You know, one of the technologies that we identified in the Carbon War Room is actually a widget that helps you drive your truck, your 18-wheeler more efficiently. And a couple of the insurance companies that actually provide the trucking insurance are actually looking at it, and they're going to potentially offer a discount in premium. And so you have fleets very, very engaged on that. I think if understanding how that sort of comes about, there could be a domino effect into other areas.
I don't know. Every county and every city has different responsibilities, but I'll just take sort of the average county that I grew up in Illinois. I think there's a couple of things that county commissioners have some control over. One is transportation planning. And you know, one of the things that I think that the data now shows from research is that road widening and some of those things are just excruciatingly, like, you know, ineffective in dealing with traffic. I mean, particularly in a place like Austin where traffic is a big challenge. What you really want to do is to actually figure out a way to restrict traffic and make traffic even worse, and then force people out of their cars, right? What happens is when you road widen is that 2 years later, basically everyone just believes that because the traffic is less, they're going to drive into work instead of taking the bus or whatever they were doing before. And I do think that when you think about how much money we spend on transportation related projects, it's way, way, way cheaper just to make sure the bus comes every 5 minutes instead of every 30 minutes. Like this morning, I was waiting for the bus and it took 30 minutes. So you know, I think it's an important. There's the transportation planning piece, is the first piece. I think the second piece is garbage. So a lot of county commissioners actually have some influence on waste. And when you think about waste, we're really behind in this country. The average city in the United States transports their waste 350 miles. 350 miles, right? Think about how much carbon pollution and just raw cost that is to actually transport your waste that far. The amount of landfills that are getting approved to be built in this country is really, really low. And most people don't think that there's going to be a lot more. You know, I mean, Massachusetts has gone so far as actually banning food waste in the landfills. So now I think there are going to be 1,200 anaerobic digesters that are built in Massachusetts or not Massachusetts, but in the Northeast broadly, probably in, you know, probably 4 or 5 years, from like 6 there today. Germany is just full of anaerobic digesters, so it's not like it's a new technology. I think that, so the whole waste to value space is something that I think for whatever reason, because what's his name from Waste Management gives good speeches, everyone's
David.
like, it's getting done. It's not getting done. And I think it takes county commissioners like yourself and others to actually say, you know what, like, we're not leading here. There's actually a bunch of people in Europe and South Korea and other places doing this already. We should probably follow their lead and actually do some of the best practices. And there's certainly lots of entrepreneurial companies in the area that already provide these services that have been begging, you know, county commissioners to do this. So getting some leadership there, I think, is a good idea. And the third area that I would talk about is wastewater. So I think most of the wastewater facilities in the United States are completely, you know, at capacity. There's a huge industry now of like folks who are in an uncoordinated fashion doing little projects. Like, so if you want to build 1,200 new homes in a subdivision and the wastewater treatment facility says we're filled up, they build like a little $3 million wastewater treatment facility just for their 1,200 homes, which is completely inefficient. And then they, you know, like give away the infrastructure to the wastewater treatment plants after 20 years, just because they don't want the liabilities after that. But there's a lot of nuances to this, and the technology exists. I mean, everything from microbial fuel cells that eat up the sort of solid particles from breweries and wineries and all sorts of other folks who are throwing crap into the water system, which is really making it hard. So you can actually do pre-treatment of a lot of that water before it goes into the system. And a lot of that stuff has 2.5-year paybacks. So it's not like you're actually forcing people to do things that cost them more. You're actually forcing people to save money by doing this. It's just, you know, at the end of the day, the CFOs in this country in the 1970s were taught that this stuff is core to your business and this stuff is not core to your business. And all of our stuff is viewed as not core to your business. So they just don't want to spend a dime on anything that's not core to their business, even if it has high payback. And McKinsey's analysis of this shows that CFOs throughout the United States for stable companies use a 50% discount rate for climate change solutions or resource efficiency solutions in their parlance. A 50% discount rate. That basically means like an 18-month to 2-year payback. For infrastructure that lasts for 20 years, et cetera, the best rate of return that Dow has had on their entire capital spending since 2006 is on their energy efficiency portfolio. They got a 2.5x return on their investments there and got much less in all their core investments.
I would add two pieces. I think actually three. The two resources that I think are brilliant is Bloomberg Associates is a entity that's just been launched by the philanthropies, and they're reaching out to it'll ultimately be about a half dozen cities and helping them it could be municipalities, and helping them do sort of an integrated plan to actually address the overall issues. The information on their website, I think, is actually very helpful, even if you don't become one of the cities. I think another program to be watched, I don't know that it's 100% rolling yet, is the 100 Resilient Cities out of Rockefeller Foundation. Again, they're really looking at the solutions, and and they're also looking sort of broader, integrated across, continent, like what we're doing with Latin America versus Canada, and so there's a lot of opportunity. I mean, so really larger integrated solutions. The other piece, just to actually, there's a company that's primarily in Massachusetts, well, in the Northeast right now, on the waste side. You pay a particular fee for your waste, regardless of how much you pick up or leave curbside. And they've actually developed a system where it's a colored bag, and anything you recycle or anything that can be reused, you don't pay anything for. Any of the food waste or anything, but anything that can't be recycled, you pay for. And it's changed people's buying patterns. It's lowered the amount of waste in these communities exponentially. And it's also sort of creating the awareness it's creating, and also the economics. The individuals are saving a lot of money has actually been really positive, and that's where you're getting some of the data for the anaerobic digesters and some of the other solutions you're seeing in the Northeast.
I'm Sean Poole, student at the Macomb School of Business. Used to work in energy policy, and I'm just question on the solar financing piece, kind of a two-part question about the solar financing. We talk a lot about these sort of local solutions and what can we do at the city council level and at our own individual level. And I want to see investors getting rich off these solutions and pouring money into it. And I want corporations to solve the problem. And I want us to be there, arms wide open. But I don't want it to necessarily feel like it has to be a lot of work on the shoulders of everyday Americans who have demonstrated a willingness to engage only up to a point. So with that in mind, I'm curious, it seems to me that some of the drivers of the big boom in solar have been this sort of plummeting price. And I'm curious to get your take on the degree to which that's been the primary driver and whether that will continue. And also part two of that is, another thing I've seen is, like you mentioned with the yield codes and the securitization that Solar City did this year for $200 million, and did another one the previous year. New financing structures coming in that are kind of lowering the cost of capital. And do you see that as a trend that is going to accelerate, and will the expiration of the investment tax credit hit that and slow it down? So what's sort of the future outlook for solar with regard to those two issues?
You want to talk clean feet?
Yes. Do you? Okay. So there's thank you. It's a very interesting question. I mean, my overall, and unfortunately I'm only going to be able to touch a couple parts of it, but because there's so much richness there. In general, the solar industry, again, it's a known industry, right? I mean, the numbers are there, the opportunities. It's fairly straightforward. The Jigar's statistic about how often panels are going up is amazing. It's also sort of there's secondary markets, there's yield codes, all the situations are there. The opportunities, then, I actually take it to a little bit of a different side. I think this is an incredible opportunity for the average investor. I think this is that opportunity where you can make investments at the individual level. to a great extent, in that you know it's an opportunity. And I think there are a lot of people that actually want to be giving back, and rather than investing in bonds and whatever the bank is offering this week in their TDs, or whether that opportunity, it's not really giving you the kind of return. So one of the vehicles that Jigar launched that I'm involved in, full disclosure, is Clean Feed. And Clean Feed is actually a fund that's for qualified investors. You can actually put in a smaller amount of money, but you're actually getting a much higher return. And all of the projects are in the renewable energy space. So you're having an opportunity where you're investing in your local community, you're having a positive impact on your bottom line, and you're also having a positive impact on your community. And so that's actually engaging people, I think, in a really positive way, creating a deal flow, and the deal flow is there, so it's creating the opportunity. And so, my sense is that's actually the way forward. And
Well, Anne's an investor in it, and it's, we're generating 15% after-tax unlevered returns. So the returns are great, and I've got 30 family members in it, and they're all great because they're sort of semi-retired, and they're making a lot more money than the 3.5% they're making in Prudential. So, it's hard assets, right? So they can actually explain what they're invested in. So we own like solar hot water systems on GW and American University's dorms. We own wood pellet stoves that replaced, heavy fuel oil, heating oil, stoves at the University of Maine, et cetera, et cetera. So I think there's a lot of stuff that people can do to invest and make a crap load of money and get rich off of doing this stuff. And I clearly, resemble that remark. But I think more broadly, in terms of the solar financing piece, I think solar is at a point now where Michael Lewis is going to write books about us in 10 years, right? In the same way that you talk about the mortgage industry and Lewis, what's his last name? Ranini or whatever, who Ranieri, I think, who started the mortgage-backed securities market in the late 70s. We're in the same place in solar now. Basically, whether it's a yield co or securitization from Soul City, et cetera, all of that innovation is coming, by the way, from our industry. Not a single bit of intellectual property has come from the investment banks, which is shocking to me at how useless they are. But all of the actual financial structuring has been done by Solar City, by Sun Edison, by NRG, by some of these Pattern Wind, et cetera. And so all of that stuff's happening, and what that means is there's a lot of folks coming in. But one of the challenges is with the Clean Feet Fund we've now created a successor fund to that, and that successor fund has basically gone to large high net worth families, and they're all putting in $5 to $8 million each into the fund. And we've put together a special purpose vehicle for smaller accredited investors, but it's hard to raise money at $100,000 at a time from individual investors, right? It's not one of those things, and Fidelity doesn't have an easy way to get on their platform, or JD Edwards, or was it Charles Schwab? So I think that a lot of these opportunities are there, and the returns we're offering with our new funds probably going to be closer to 25% returns again in hard assets. But I'd love to have a bunch of $100,000 investors, but I don't have the time to go chase them all, right? So someone actually has to do the work to create the platform to put that together. I don't think that the crowdsourcing platform is really working to do that. So I think you're at the Macomb Business School. You're going to be the one that figures it out, hopefully, and then I'll put that money to work for you.
I think maybe we'll make that the final question, actually.
Dave Coleman from Nike. Can you give me some top suggestions, recommendations for short-term and long-term as far as corporations like ourselves?
Do you mean for investing in the space, or?
Well, as in, what would a corporation do in order to take advantage of what you're recommending?
So specifically Nike. I think there's a few opportunities. I think you touch a couple, and I'll just use, you're in front of me, so I'll call you out. But I think there's a couple. I think there are several opportunities. Just for Nike, the Sustainable Leather Working Group is an organization that you all participate in, that you can actually dictate the quality of leather that you're getting. The front end of that is you're actually dictating the life of the animals. So you can actually determine, so much of our emissions come from methane. So Nike dictating how those animals are fed, which you can do, and how they're slaughtered can have a huge effect. The data indicates it's also actually a very profitable industry, because you'll pay more for a higher quality leather, but people also pay more for higher quality meat. And so you're lowering the methane and you're creating the opportunities. Again, and I won't go into the specifics of it, but there's also more job creation around that, because it requires a little more work. So in places like Brazil, where you all are doing some sourcing from, and other places, it can have an incredible opportunity. In general, for the industry, I think the biggest opportunity is actually in greening the supply chain. I think I just gave sort of a short example of that, but I think anybody on the retail side has the capacity to actually go back, going back through your supply chain and being sure that each of the pieces along the way are more sustainable. There's one woman I know and actually meets with all of the commercial, so Gap and some of these other companies to find out where they're sourcing from and where their needs are going to be. And then she turns around and invests in the companies that they're going to buy the cotton from, that they're going to actually do that's actually going to do the sewing and the travel. And the transportation, excuse me, because she knows that that's part of their quality. So I think I think those pieces can be really affirmative. But I think Jigar has a.
Well, look, I think Anne's exactly right, but just to be very specific, right? I mean, we've worked closely with Nike, and my former executive assistant works at Nike now. And,
that's right.
And so, look, I mean, Hannah and I have talked a lot, and basically the challenge with Nike, as well as lots of other organizations, is they've studied the supply chain extensively. And then they came to us and said, hey, Jigar, but we're not getting the same level of adoption of energy efficiency and renewable energy within our supply chain. Can you help us? And I was like, yeah. You've got to basically change your contracts for sourcing and basically give them a bonus for doing well and a penalty for doing worse. And they were like, hell no, we're not going to change our contracts. Okay, well, I get that. But then if I'm going to go into some of these suppliers, and Nike holds the right to be able to fire them at any time, right? So if I make a 5-year investment into one of your suppliers' companies in Vietnam or whatever else, and they lose the contract from Nike, well, I don't know that they're going to be in business to pay me back, right? So you have this dilemma around this, and I think that it's something that it's not a problem for Nike necessarily. Like Walmart, everyone has the same problem, but I do think that that when you think about the integrated world that we live in today, I do think corporations, just stepping back for a second, have taken this point of view from the 70s where shareholders are first and customers are second. And it's actually this paper that came out of Wharton, I think, in like 1976 that basically started this whole movement. And we've got to go back to a place where people actually believe that the communities that they operate in and the employees that they have, as well as the customers that they serve, are equal to their shareholders. And what that then means is that you're willing to actually invest in your supply chain, in your partners, not with money, because I'm happy to bring the money, but just with changes in your contract, changes in your standards, changes in lots of these other pieces. I mean, what Anne didn't say about the Brazil piece is that, the other working group was put together is because it's the #1 source of deforestation in Brazil, right, which is one of the largest sources of climate change gases in the world. And so, and the way you fix it is, right now, the grasses are so bad that you can only grow 1 head of cattle per 2 acres. But you can actually put in better grasses and fencing and rotational grazing, and you can get up to 4 head of cattle per 2 acres, right? And then that would reduce the amount of Greenpeace people, frankly, that get killed over this land, right? I mean, and so they've got laws in Brazil, but a lot of these local folks are pushing hard to make more of a livelihood for themselves. And so I just think that there are these issues, and Nike frankly does it better than almost anybody else does, but there's still these constraints largely led by the CFO's office. And since I've done most of my sales work for solar through CFO's office, I know them pretty well. It's tough though. It's really, really tough because people sort of view this as CSR and risk management as opposed to integrated into their business. And it's something that we all have to work hard on to figure out how to solve.
Thank you.